Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It is 10 minutes to 5 PM on Saturday the 6th of March 2021 and we are going to be spending the next few minutes looking at Tesla. Right then, so we're going to start as we always do on this channel with our basic technical analysis first and our Elliott Wave analysis second. So if you're new here, let's have a quick rundown of the chart. We have our Elliott Wave count, which is all the letters and numbers you can see on the chart. Let's get rid of those. Then we have our 10 exponential moving average in yellow, 20 in blue, 60 in orange and 250 in green. 4 of them in total. Volume profile on the right hand side, which is a visible range and adjusts when we adjust the chart. We have a built-in point of control, which is a yellow dashed line representing the peak of the buy sell volume. Now we have an RSI here also set to a 10 close with a green 30 level for oversold and a red 70 level for overbought. We have a MACD with a 10 for the short-term moving average and a 20 for the long and a 9 to smooth. Right, let's get underway. What's the first thing we can see here on the weekly chart? And we are in log, going to shift into log scale on Tesla. There we go. This gives us a better, well, in my opinion, this is a better way of looking at the chart because it's just been such a violent move up over the last year or so. Right then, so what's the first thing we can see is a bit of a broken chart as we have a huge wick to the upside on the daily week here, and none of this actually happened. So, fuck knows what this is. Had a glitch here on TradingView. It was no broker I trade with saw this price movement during the last week, so I think this is a glitch. And when we come down to the smaller time frames, all evidence of this move disappears. It's not there at all. So, but that's irrelevant for the meantime. All we need to know is where we closed the week, and we closed the week below the 20 and the 10 exponential moving averages, with the body of the candle below both. Still above the 60, still above the 250. No bearish crossover of the moving averages on the weekly time frame yet. Right, RSI has come back to neutral territory between the 40 and the 60, having been at overbought levels for a very long period of time, finally bringing down that bearish divergence between high, lower high and lower high in RSI and high, higher high and higher high in price has finally been answered by a move down back into neutral territory. Now, we all know, if you've been following my channel for the last few weeks, I called the top in Tesla a few weeks ago and discussed whether or not it was the high, and I was saying how we were in this fifth and final wave move up, and I entered a short trade and we've now been on our way down since. So hunky-dory there. Now on the MACD we've got a crossover of the 10 moving average over the 20, short term over the longer term, 2 red bars on the histogram here. So belated sell signal here on the weekly time frame, got a much earlier one on the day time frame before we even put in the high, which you'll see now if we come down to the day time frame. So on the daily, let's see how we're doing. Below the 10, below the 20, below the 60, above the 250 on the daily time frame. See this big wick here on the Thursday candle as well, which we do not see on the shorter time frame. Now we had RSI come down into oversold conditions on the daily time frame with a one bottom here on the low of the 23rd of February. We hit an RSI reading of around 23, and then we got another low on the Friday low where we hit an RSI of around 25. So we actually got a low and the higher low on the RSI, low and lower low in price. This is bullish divergence, suggesting a rebound and perhaps this move having gotten a little overdone, and we're ready to bounce back up now. So MACD showing a sustained downturn in bearish momentum over a significant period of time. We can see that the crossover occurred on the 20th of January back here, where we got the sell signal in the MACD on the day time frame, and yet the market peaked after that and then started selling off. I didn't sell here immediately on the signal and I didn't quite catch the top, but I did get this retrace move here of 5 ways down, 3 ways up, and that's where I entered short from there. Now, I've been accelerating away from the longer term moving average. The short term moving average has looking pretty bearish all round, but maybe a bounce is due. So let's bring up our Elliott Wave and see what we can see as we come down to the 1 hour time frame and have a closer look. As you can see, previous day on the Thursday here, no evidence at all of that gigantic spike, and there isn't on any of the smaller time frame either, so I have no idea what that was. But anyway, let's get to it. What can we see here on the hourly time frame? Well, pulling it simply, we have 5 completed waves down. 5 completed waves down. So we can either drag on this 5 for a bit longer, maybe we can say 1, 2 here, maybe we're putting in the 3 and the 4 now with the 5 to go a little deeper. That's a possibility, but I'm going to call it here and say this is the 3 of the 4 of the 5. We've had that bounce from oversold conditions. We've had this bullish divergence ever so slight, which has been confirmed also on the RSI here on the daily time frame. If we just adjust the chart slightly, get rid of that. Just adjust the chart slightly, I'll show you what I mean. So low on the 23rd, down to the low on the Friday yesterday. Here's our low and lower low. Meanwhile, we pick up a low and a higher low on the RSI, bullish divergence between RSI and price, suggesting that we are going to see a bounce. And sure enough, into the trading session on the close on Friday, we did see a bounce. Teeny tiny green bar appearing here on the histogram as we get a short-term crossover of the short-term time frame over the long-term time frame moving averages on the hourly chart just as we close out the Friday. So what happens next? Well, if we've got 5 waves down, we all know what happens next. We've either put in a wave 1 or we've put in an A wave. Now I've got A labelled here, but this could be one of 5 waves down into a bigger A, which would mean, you know, the total collapse of the Tesla price all the way back to below where we broke out a couple of years ago, which is a possibility. I'm not saying it's going to happen, but you have to be aware of it. If you're a bull, you have to be aware that you're in a bubble, a gigantic one in terms of a single asset like Tesla. So just be aware of that. Now, we bounced, so where are we going now? Well, if you're a bear like me, you're looking for free. I'm going to get stopped out here once we go 5, wave 5 comes back over the 3. That's my stop right there at 620.04. I took a little bit of profit on the bounce when I saw the bounce here, but I'm going to leave the rest of the short trade open and let myself get kicked out, because we know that if this is a wave 3 and here, and we've come down, and this is a wave 1, 2 here, 3, 4 here. The bottom of this minor wave 3 is closer as a stop than the 1 would be, and I'm perfectly happy with the profit there. So what I want to see now is 3 waves move like this. That would be a flat pattern, 3, 3, 5, which you can get in a 2, or we could get a more common zigzag, which you would get in in a B wave or a 2, which could probably be something like this, taking us up to the 61.8 here. Now these are the 2 blue lines. Of the 2 lines, I've got 1 blue, 1 yellow. The blue represents a 50% retracement from this move down. That would be at 719.51, and then we have a 61.8% retracement at 761.04. So if you're a bear, you've got to be a bit patient here now. You either stay in the trade and let it ride back up and potentially eat away your profits. Not something I like doing. I actually like to take profit when I can, and I have done here, and I will do the rest of it once I take out this pivot here. And then I will be looking for 3 waves up. 1, 2, 3. Get back in short and start selling again. That's it. If you're a bull, then you're not going. The best buying opportunity you had was the pivot yesterday at Friday, and if you want to get in, you got to get in soon. Otherwise, you're going to lose your margin of safety here. So your margin of safety obviously would be with your stop below 538.17, just a fraction below, just to be absolutely certain, and get out of the trade early if we do continue down. However, if we are coming up in a 3-wave move like this, or even higher towards back near the highs, it could still be a very good long trade, even if we don't make new highs. If I'm wrong and we've completed some kind of correction here and you do make new highs, then this is a pretty damn good pivot at 40% off price to buy, isn't it? Really, not quite 40% now on the close on Friday. You're down 32% from the high, but we did reach 40% down in total, so not too bad. So that's it, guys. That's how I see it at the moment. We're either excuse me, have put in a wave 1. Let's just put a little marker here and say 1. Wave 1 potential, and we're coming up to put in a wave 2 before a 3 down, then a 4 up, then a 5 down into an A, then a 3 waves up, and blah blah blah, and this correction could go on for months or years. Okay, that's the really long term. Or we're going to have it over with in a lot shorter time frame, where we're going to go A, B, C, down to a significant 50% or more sell off, 60% or more sell off. That would be perfect for a wave 2. So it's out here somewhere. I'd obviously just left it out the way to forget about it. But let's say we're doing an ABC into a wave 2. Right, on our arithmetic scale, obviously this would look much more severe because we'd be looking for 1-to-1 parity, wouldn't we? So let's just auto the chart Let's hide the count for the moment so we can get a better clear. I'm not sure if it'll come back up the second I click on the Fibonacci extension. It might. Yes, it will. But at least I got to pick out the top. So let's say we get a 50% retracement and we're looking for one-to-one parity. Then the wave C would complete at 355.79. 61.8% retracement would have the C complete at 398.11. So more, a significant sell-off is what we're saying. Now let's have a look how that would look if we take a retracement of the whole move up into what we're saying is the top. Now I've got it labelled as cycle wave 1, but who knows if it's cycle wave 1? It could be super cycle wave 3. It could be super cycle wave 1. It could be primary 1. I don't know. The Tesla has not been in the S&P for very long, and it hasn't even been a public traded company for that long, for just a few years. So we're dealing with very young price data, if we're being absolutely honest. Let's just zoom in and see how close we got to the top on this. Let's pop it right there. And let's just lock that for sucker in place. Right, so I said, that's log scale, let's come into our arithmetic scale. I said, what was it? What we got here? Excuse me. So 61.8% retracement, right, is a wave 2, but a 50% is good enough. Now 50 would have us come back to 467.45. 467.45. That's from the high. So let's just put in a couple of retracement bars here as well so we can see what we're looking at. We've got our retracements to the upside, but what about our extensions to the downside once this wave B plays out, assuming the bearish count is correct and I'm right on the bearish count? If I am, where can we expect to get to? Let's put in the blue for the 50 and let's put in a gold, the bright yellow colour for the 61.8. Alright, let's clear this fib. Okay, so now we're starting to get a clearer picture. Let's just take off these white lines here. We're not worried about that. We know where the top is. We can leave that one there. Makes it easier to measure. So, and then we've got, let's just do our one-to-one parity one more time. Now that we're here, just to see. So let's assume we've got 5 waves down, 1-to-1 from the 50. Look at that. The 50 would bring us straight to the 61.8% retracement for a wave 2, right around 355 to 366. And then if we budged it up to the 61.8, let's say, retracement for a wave B, that would put the 100 above the 60, between the 50 and the 60, around 394. You could come higher, of course, because the B could keep coming up, coming up, coming up, coming up. It could come all the way up to here, and then still score a C at the 466.43. That would be 50% extension, 50% retracement overall, and a 1-to-1 for the A to C. So yeah, a lot to play for at the moment. I really think an excellent opportunity coming up, if I'm right, and the Bears have got a great opportunity here to look. Now you got to be disciplined here, and you got to be bloody patient as well, because you're looking for 5 waves, then you're looking for 3, then you're looking for 5. Okay, and you want to keep an eye on that wave structure. And of course, for us Bears, the closer we get back to this high, the better. We want to get back to towards this high, because that gives us a margin of safety. We can have our stop just beyond the high and risk very little in the short down to the C. The sooner we have to take up a short position, given a completed 535 or 335 move, which we can measure and count, and it makes sense, wave extensions and retracements make sense, the sooner we have to get in, the more risk we have to take on. Now we have to be disciplined regardless. If you can't pick out a cut-off point, then you should discipline yourself to pick out a percentage instead. That's just my opinion. You do whatever you like. It's not trading advice as always. Read the disclaimer. But for me, I like to be able to pick out an obvious pivot if I can. The high here is the most obvious. If I'm too far away from that when I'm picking out a short, then I satisfy myself with a percentage if I can't find the cut-off point. But for the bulls, you got it easy. Your cut-off point is 538.17 for the meantime. If we come back down, you're out the trade early. If we keep going up, then you've got a minimal level of risk. And you can always move your stop up. So bulls have the favour for the short term as we retrace to the upside. So if you want to take that trade, I have to admit I didn't take the trade. I was too busy looking at the Nasdaq pivot, which I got a long trade on that at the pivot. Missed Tesla. It's still early enough, but I'll let it go. I'll wait until I get kicked out of my short and see what happens here. I just want to see those 3 waves up, and then we can start our next 5 wave move down into the sea, and then Bob's your uncle. Off you go, wave 2 complete, 50 to 60% sell off of the market, chance to get long. There's always a possibility though, just bear in mind that all of this is just a wave 1 down. Now if that's the case, well, if that's the case, it's going down to Chinatown, and because we're going to go 1, 2, 3, 4, 5 into an A, then a B, then a 5 wave down into a C potentially, and that could take forever. So let's just trade what we can see and assume a 3 wave move here to come back up to the upside and a 5 wave move back down. So if you're the bulls, I'd be much obliged if you could get on Twitter and Facebook and wherever it is with your mates and start talking Tesla stock back up and how it's going to the moon forever and that Elon's a genius and the man of our time and Tesla stock is going to 1 million. That'd be much appreciated, because the closer you can give me margin of safety to short this, the better for me. And of course, if you guys are right and we make a new high, then I'm only going to lose out a little bit, so it's a win-win. Alright, that's how I see Tesla, guys, at the moment. I think that's probably it for the week now. Got a busy day tomorrow, no more time to record any videos, and the kids are back at school on Monday, and I intend to actually take some time for myself during the week and enjoy some time off teaching. So anyway, until I see you again, probably next weekend now, take care of yourselves out there, all the best, and I'll speak to you soon. Oh, and I should say, if you're new to the channel and you like what you've seen here, please subscribe and smash the like. Alright guys, take care.